Copper is up. Aluminum is up. Iron ore, nickel, zinc. Basically every industrial metal you need to build an electric grid, an EV, or a data center. And there's one ETF that owns the entire global mining industry in one ticker. Except gold and silver, those are deliberately left out. It's called PIC. So what is PIC? PIC is the iShares MSCI Global Metals and Mining Producers ETF. Low expense ratio, 236 holdings, global reach, and, crucially, the index excludes precious metals. No GLD, no SLV names. You're buying the companies that pull industrial metals out of the ground: iron ore, copper, aluminum, lithium, coal, steel, nickel, and everything else that powers the real economy. Here's how it works. PIC tracks the MSCI ASWI, Select Metals and Mining Producers X Gold and Silver Index. It screens for global miners and market cap weights them with some diversification controls. The result? BHP Group is the biggest holding at about 11%. Then Rio Tinto, Freeport-McMoRan, Glencore, Vale, Anglo American. These are the household names of global mining. The fund holds 236 positions in total, far more diversified than the narrower thematics like URNM or COPX. The top 10 make up roughly 44% of the fund. Big names matter, but you get real exposure to mid-caps and international miners too. The holdings tell the story. BHP and Rio Tinto for iron ore and diversified base metals. Freeport for copper. Glencore for trading and diversified metals. Vale for iron ore. Anglo American for copper and platinum group metals. Nucor for U.S. steel. Fortescue for iron ore. If the global physical economy grows, these are the companies that dig up the inputs. Quick stats. Expense ratio is 0.39%. That's cheap for a global thematic ETF. AUM is about $2.1 billion. Dividend yield is meaningful here, around 1.85% on a 30-day SEC basis, paid semi-annually, because miners throw off real cash when commodity prices cooperate. Launched in early 2012, so 14 years of track record across multiple commodity cycles. How does it compare? The closest peers on our channel are COPX, Global X copper miners, and URNM for uranium. PIC is broader. COPX is copper only. URNM is uranium only. PIC is everything except precious. If you want a single fund to capture the global mining industry, PIC is the answer. If you want concentrated bets on a specific metal, stick with COPX, URNM, or one of the silver funds. You could also pair PIC with GDX for a complete metals portfolio. PIC for industrial, GDX for gold. Who is PIC for? If you believe global industrial growth, electrification, AI infrastructure, and reshoring all drive demand for physical metals, PIC is the cleanest one-ticker way to own that thesis. It's also one of the highest-yielding thematic ETFs because miners pay real dividends, but know the risks. Commodities are cyclical. When China slows or global factory activity contracts, PIC sells off hard. Mining is also exposed to regulatory, labor, and geopolitical risks in emerging markets. Verdict: PIC is the global miners ETF most diversified portfolios should actually own. Cheap, broad, meaningful yield, 14-year track record. Size it like any thematic, 5 to 10%. Pair it with COPX or URN if you want metal-specific tilts on top. Subscribe for more no-fluff ETF breakdowns. See you in the next one.